Every trader aspires to be a consistently profitable trader. Every trader wants to figure out the markets and scale the challenges that this extremely competitive industry provides. But before you can start to improve your trading, you need to first identify where exactly you are on your development process to a consistently profitable trader. So maybe you are a struggling trader, maybe you are a break-even trader, maybe you are a trader who's bleeding capital slowly, and we all want to become consistently profitable traders. The first step, that is identifying where you are exactly in your trading journey, we are going to answer that question today. Today, I will be sharing with you the trader development spectrum, which will help you find out where exactly you are in that development process and what you have to do to go forward and become a consistently profitable trader. And we are going to bring you more such videos because you are part of the best trading community in India, the Complete Trading Framework Club. So first and foremost, what we need to ask ourselves, right, is where are we in our trading? So if you ask yourself, where are you in your trading right now? And I have given some options here. Some of you might be absolute beginners. Maybe you are new to market. You are deciding to pursue trading as a career choice, as a business, and you don't know much about the markets. That is all right. Or you may be trading for a while. You have been trying to make this work. You have been trying to achieve consistent profitability, but in the process, most of the times what happens is, if you're new and you don't know much about trading, you end up making losses, and sometimes the losses are big, and you might end up blowing up your account. And trust me when I say that I have done this multiple times, so I know how it feels. Okay, so, and it's nothing wrong there, nothing wrong. Just imagine you want to become a brain surgeon, and you tried for say 1 year, you read some books and you watch some videos, and then you decide that okay, from the second year onwards you're going to open a clinic and you're going to perform brain surgeries. It's not going to happen. I mean, nobody first of all will come to you, and even if someone comes to you, they probably won't let you touch them when they realize that you are just into it 1 year. So it's very similar and very true for trading. Like, if you come to trading and you try to do it for 1, 2, 3 years and you expect yourself to make consistent profits, it's not going to happen. It's not going to happen. You have to put in the time, you have to work hard, you have to learn the things correctly, and only then you will be able to make consistent profits. It's achievable. Like, anyone can become a brain surgeon if he applies himself, herself. Same is true for trading. You can become very successful, but the only thing is you have to apply yourself. Then what can happen is, let's say you have been trading for a while, you have blown up your accounts for 1 or 2 times, and then you have understood to control your losses, but still the losses are happening, but they are very small, but they are continuously happening. That you just cannot catch a break and make some profitable trades. So you are bleeding capital. It's not like you are losing money very fast. You are losing it slowly, but you are still losing it. Then comes the stage, maybe you have been able to achieve break even. Like, you win some trades, you lose some trades, but at the end of the month or week you are somehow managing to be break even, but still not making profits. Some of you might be profitable. Okay, you can make some money, you can probably trade an account worth 10 lakh, but the moment you try to increase your capital, you again start losing, or it becomes difficult for you to maintain the profitability. And lastly, you might have been doing this for a while and you are absolutely consistently profitable. There is no problem in your trading. What you may face once in a while, even the most successful traders face this, is that there comes a time or a phase in their trading where they end up making mistakes. Now they know that they cannot make those mistakes. They know they are better traders than that, but they still end up making mistakes, and that is because they get distracted. Okay. Now this can happen with anyone, and getting distracted is an issue. And if you want to be consistently profitable, and if you want to stay consistently profitable, what you need to do is you need to minimize the distractions. At the same time, you need to strike a balance between your trading and your life. So what stage are you in? Which of this describes you? That is the first step you need to take in your trading if you want to become a consistently profitable trader. If you don't know where you are, either you are doing very less or very little. Like if you are, let's say, a break-even trader and you are trying to work on things that an absolute beginner should, or you are not even good at those, but somehow you are managing break-even, your trading will not flow the way it should. So first and foremost, you need to assess where exactly you are. Only after that you will be able to proceed and become successful in the trading. Okay, move. Now, if you look at these stages that we just discussed, an absolute beginner, you have blown your accounts, or you're bleeding capital, or you're break-even trader, successful trader, whatever, it looks like a spectrum. And this is what I call the trader development spectrum. If you look at the left one, you can clearly see here, this is an absolute beginner. He basically knows nothing about the markets. Then he gets into trading, and then he faces this, terrible phase in his trading, which is shown by the red box, where you are making losses, and that is always painful. Then somehow you manage to get into a break-even trader, and then if you persist, most of the traders don't even get to this break-even stage. Okay, they cannot bring themselves to work hard enough to cross this boundary. They stay to the left of this. They are not able to cross. They are not getting here, and that is why they cannot enjoy the rewards of being a consistently profitable trader. This is what happens in this blue box, right, where you will basically get the rewards for all the hard work that you are going to put in to get yourself from this point to this point. Make sense? So let us see how we can do that. So how to identify what stage you are in? So I just showed you 6 or 7 stages, and I said that you are in either one of them, or you are in a transition phase where you are going from one stage to other. But how will you identify? Like, I need to give you more. I need to help you out to identify that particular stage for yourself. And no one does this, alright? No one does this. They will go through this particular topic very quickly, and then they will straight away jump into like buy sell signals, or how you can enter your trades, exit your trades, and then what happens is you get excited, you might make some money for a while, and then again your trading falls back into that old loss making phase. So we are going to avoid that. Okay, so we will study the following 4 things. We will study the characteristics of each stage, main challenges each stage faces, main goals each trader in each phase wants to achieve, and how they can move forward. What is the way forward for them? Now, I'm not going to spend too much time, but it is important that we go through this. So, absolute beginner, what are the characteristics of an absolute beginner? How will you identify that you are an absolute beginner? If you are new to the field of technical analysis, you have not yet, spent time on analyzing the charts, and you haven't got into indicators and all those kinds of things. You are new to the field of technical analysis. You are very excited to start trading. Like, you have heard about it, you have seen some videos, you have watched business channels, or you have seen a friend or a family member doing it, and you are very excited to start trading, but you don't know much about it. Or maybe you are trying to get into markets, and whenever you look at those markets, like whenever you look at the news channels, whenever you look at horror stories shared by other people with you, how they made this much loss, or sometimes they make good profits. So when they share all the stories with you, you feel overwhelmed. You say that, oh no, this is a little bit too much for me. I don't think I can handle this. Make sense? So maybe that is what is going on with you. Now, if you want to be a successful trader, the first thing you need to do is stop watching news. All right. So if you're still looking at news, no matter how many years you have been trading for, no matter what you're doing with your trading, break even, slightly profitable, loss making, you stop it. Okay, it's not at all good for the health of your trading career. Okay, what are the major challenges that an absolute beginner faces? The first one is that he don't know where to start. Nowadays what is happening is, there was a very big uh, uncovering of scams in the YouTube field. Some people have gotten into YouTube, Twitter, and they are exposing all the fake gurus as they call them. Now, if you are an absolute beginner, your biggest challenge is not to get trapped by one of these, because what will happen is you will feel so good in the beginning. You will feel that the sky is the limit, and you are going to become extremely successful trader. But the moment you start getting into real world of trading, everything crumbles, and then you simply don't have any way forward. And why? Because you have been shown some dreams. It takes a lot of time to achieve those dreams, but you have been told that it is possible, very easy, follow my method, follow my setup, and all those kinds of things. Does not work. Okay, you have to avoid that if you are an absolute beginner, because if you are doing it for a while, absolutely you will get an idea. You can talk to a person for say 15 minutes, and you will have an idea that whether that person is a genuine person or not, whether he knows his stuff or not. Okay, but if you are new, then you can be trapped. Then you have to avoid bad habits and bad attitudes that develop. Okay, when you start trading. Now, what do I mean by bad habits and bad attitudes? Like, so many people have been trading for so many years, but I still hear them saying, oh, RBI increased the rates, and that is why the market fell and I lost money. I thought they were going to decrease the rates, or maybe the Infosys results were not as per expectation, and that is why it fell and I'm making some losses now. What they are doing is they are externalizing the blame. They are blaming other stuff for their losses. They are not taking responsibility. Again, a clear sign, or a clear, area that a beginner trader has to improve. Because if he does not improve that, if he does not start taking responsibility for your trading, then please understand, it is practically impossible for you to become a good trader, become a successful trader. Okay. Avoid some misconceptions about the market. Many people have a lot of misconceptions, like there are manipulators in the market. They will manipulate the markets. Now, to some extent it is true, but not the way you think. It's not like a room full of people who decides that, okay, today we'll take market down or up. It does not work like that. There is manipulation, but it's not the way it is maybe shown in movies or something like that. Now, some of the misconceptions regarding the market, the most common one, like if you tell someone that you are a trader, even I'm doing this for almost 2 decades. Even when I tell people that I am a trader, first they don't understand. They believe that I'm trading steel or something like that. I am not doing that. But steel as in, like, I buy steel maybe and sell it again, or I'm trading some stuff. No, I'm trading futures and options stocks in the markets. The moment I tell them that, moment I clarify, they start looking at me funny. They believe that I am gambling. They have that idea that, okay, trading is gambling. It is gambling if you don't know what you are doing. If you don't understand the odds, if you don't understand probability, if you don't understand the way probability is used in the markets, then definitely it is gambling. But if you know all that, then please understand, this probably is the best business in the world. The most lucrative, the most rewarding, very difficult, most competitive. But obviously, I mean, if there are no challenges, how can you expect big rewards? Make sense? Okay, moving on. So what are the main goals that an absolute beginner should have? First and foremost, he should worry about starting on the right foot. He should make all the research, all the efforts to make sure that he is not getting trapped by a scam artist. He is not relying on unreliable sources of information like news. I mean, news may provide truth, but that truth is not usable in trading. Okay, it's not useful for taking trading decisions in real-time market. So that is why I am saying that it's not reliable. The second most important thing is he should be able to preserve his capital. That is his primary goal. Many people come to the markets expecting to make a lot of profits, expecting to become like the most rich person in the world, like the next Junjunwala or Warren Buffett, and they are not focusing on preserving your capital. Please understand, if you bring say 10 lakhs to the market And if you're not able to protect that money, you will never be able to make money. And if you believe that you can, if you will be able to make good profits, if only you had more capital, then please understand, if you cannot trade with 10,000, you cannot trade with 10 lakh, and you definitely cannot trade with 10 crore. Market is fractal, both in terms of chart patterns as well as capital. So obviously you won't be able to trade futures and options with 10,000 capital, but if you cannot make money in with 10,000 rupees in the markets, and I'm not talking about growing 10,000 to 10 lakhs, no. If you cannot make, say, reasonable rate of return on your 10,000, don't expect you can make it on 10 lakhs or more or 1 lakh. It's not possible. Finding a good mentor. Now, see why it is important, because when I was starting, I did not have a mentor in early stages. Then obviously I found some people and they really helped me out. But I did not have a mentor. I thought that I am an engineer, so I can read some books, I can watch some videos, and I can become a successful trader. And I was in for a rude surprise. Most of the time, people won't take so much time to become successful in trading because they don't have preconceived notions. So when I came to the markets, I came with a notion of I am an engineer, right? So I can do anything. Turned out I cannot do anything. I cannot do everything. I have to learn. And when I actually surrendered to the markets, only then suddenly I found good mentors, suddenly I found good content, and suddenly I could understand it. So you have to understand. Like, you need someone who can guide you through your journey. And you also need to make sure that along with money you are not wasting time. See, what happens is, what actually happened with me is I was very adamant. I thought that I will make it work. But if only I had sought help, if only I had taken help, if only instead of trying to find a perfect chart pattern, I would have found a successful trader and, kind of picked his brain to understand how this business works, I would have saved so much of money. But more importantly, I would have saved so much of time, right? So imagine, like, I'll just give you an example. I don't know which cities you are living in. I'm from Nagpur, Maharashtra. But if, let's say, you go to Mumbai, and if you just go, say, 20 years back, 30 years back, and look at the real estate rates, and look at people who have bought properties 20 years, 30 years back, and how their properties are valued right now, you will be surprised, like the kind of appreciation they have received. Now, what has happened here? It's not about that Mumbai will give you appreciation. Almost every city will give you appreciation. Now India is growing at such a fast pace that any city will give you appreciation. But the problem is, they were doing it 20 years, 30 years earlier. Now if you expect to invest in any real estate market and make similar kind of returns, you will make returns, but maybe not the similar kind of returns that happened back in the day. So it is important not to waste time, to get in early, to get help, so that you are not moving on a wrong path and then realize that, okay, no, this was incorrect, and then you have to again start from the beginning. All right, so what is the way forward for you? Now if you ask me, okay, I am a little biased here because I have spent last 2 decades trying to understand how markets work. Then I have also shared my learnings with you guys, and how I am sharing my learnings with you via the Complete Trading Framework. It is a collection of 6-7 courses which goes through from the very foundation to the trading psychology part, to the options, everything is covered in that. So that probably is the best way for a beginner to begin his trading career. Okay, so I'm not going to sell too much on sell you too much on this Complete Trading Framework. Most of you know about it, but if you don't, you can obviously go to my website aniruddhadeshpande.com, find out more. What we are going to do now is we are going to move on, and now we are going to look at characteristics of traders who either have blown their accounts or they are bleeding capital. Some of you might be bleeding capital. Jay Kishan is saying that he's an absolute beginner and he's bleeding capital, right? So why? Because he or any of you may not be able to understand where exactly you are. Now that you understand where exactly you are and what you need to do, then things will start changing. Okay, so most of the time it is confusion about what exactly your current stage of progress is in this trading business, or in any business for that matter, any field for that matter. Why there are first year, second year, third year, fourth year in engineering, or say 6-7 years in uh, medical degree, is because, if you ask a second year student a question that is probably explained in the final year, he won't be able to answer that. If he hasn't never studied that subject, how will he know? Makes sense? So you need to first understand like which year student you are basically, right? And does not matter like how many years you are trading. You might be trading for 10 years and you are still the first year student, and that will show in your results. So if your results are not as per your expectation, please understand either you are overestimating yourself, like you are a first year student but you believe that you have graduated, or you basically don't know which year student you are and the things you are trying out may not be matching with those. So what are the characteristics of someone who has blown his account? He is very desperate. He's struggling, like psychologically, mentally, financially, and he is most of the times ready to give up. Look, like many times, what happens is people lose money, and they believe that just because they have lost money, that tells them that they cannot ever be good traders. They give up on trading. That probably is the biggest mistake. The only thing I did right is, despite losing so much of money and so much of frustration over the years, not even a single day or a single moment came where I thought I cannot be a good trader or I should pursue something else. I always wanted to be a trader. I mean, obviously, when I realized that trading is a thing, and then I never thought of anything else. That perseverance is very, very essential, especially when you have made big losses. You are method hopping. Now, I think I missed a P here. It should be double P, but it's not method hopping, method hopping. What it means is that you are trying to move from one method to another. You believe that price action is not good, let me try indicators. Indicators are not good, let me try Elliott wave. Elliott wave is not good, let me try harmonics. And maybe now you have come to me because you want to try market profile or some similar tool like that. That is what happens when you are basically desperate, struggling, and basically you have no idea what you are doing. Someone who is gone through this and understood like he should not risk too much, and he is controlling his risk a little bit, but still making smaller losses, frustrated with repeated losses, like no matter what he does, he's still making losses, not able to get rid of mistakes he's making in trading, looking for that missing link. If only I could understand where exactly I need to enter, if only I could improve my trade timing a little bit. No, it's not that. It's not that. These things are easier to sell, so people will tell you about this. People will tell you that if you improve your trade timing, you will become successful. It's not only trade timing. There are so many things other than that. And again, even if you're bleeding capital, you know that maybe I can try Elliott wave and become successful. Maybe I can try VSA and become successful, right? And most of the times you look at the mentor who's practicing the method. That is again a big problem. Like if I look at Jim Dalton and I say, no, I need to use market profile and then only I will become successful. That's not correct, because Jim Dalton is an expert in market profile. But am I, good enough to study market profile? I mean, if you work hard at anything, you will become successful. But sometimes we overestimate. And what we believe is that we don't look at the amount of effort Jim Dalton has put in to become good at market profile. What we see that, okay, if I read his book, if I take some of his courses, if I take, let's say, my courses, you read my book, you will become successful at market profile. It's not like that. You have to spend that time. So if you do market profile for 1 year and then you move on to Elliott wave and go back to VSA and go back to price action, nothing is going to work for it. Makes sense. It will cause only frustration. It won't solve your problem. Moving on. So what are the major challenges for someone who has blown his account? First and foremost, when you are losing capital, you are the most vulnerable. You are most vulnerable for scams. People who promise to help you recover your capital and all those kinds of things. Please don't fall for that. Accepting the loss is most difficult thing, because you are still stuck on the money that you have lost. You want to make it back from the market. You need to understand, let's say you have lost 10 lakh and that was probably your life savings, and you are frustrated and your friends and family are angry with you and everything is just falling apart, and you want to take revenge from the market and make your money back. Please understand, instead of doing that, if you accept your loss, I had to do it at one point in time and it was very difficult, very painful. But if you accept your loss and work on your trading, then you will be able to become a better trader. And once you become a better trader, forget about 10 lakhs, you will make multiples of that, not by taking revenge from the markets, but by becoming better trader. This is very important. It's very difficult to understand if you have lost a lot of money and if you have a lot of debt and all those problems which you should avoid in the first place. But if you are in it, it becomes very difficult. If you are bleeding capital, what you are basically focusing on is you are trying to find a method or a process that works every time. You want to make money on every trade, which does not happen. But since you are not able to make back your money and you are losing your money, so you are desperate for a way. Okay, so you are trying to find the process and nail that process so that you can make money. But in this phase also, if someone starts using correct words, let's say someone starts talking about process, someone starts talking about trading psychology, but inherently he's a scamster and just going to sell you some setups, you have to be aware of these kinds of people. And how can you find out whether he's a scamster or not? Ask him questions. You ask him questions. If you ask a few pertinent questions, look at how they answer, immediately you will understand that this guy is a scam. Okay, moving on. What are the main goals? So the main goal for someone who has blown his account is definitely to recover his capital. Unless and until you let go of that need to recover your capital, you will not be able to make money in the markets. And that is for sure. I can guarantee that because I have done that for years. Nothing has worked. The moment I said, okay, I have made the mistakes, that was the price of the mistake. It was a very heavy price. Unless I pay that price, I won't be able to move forward. Then and only then I was able to turn my trading around. Okay, you want to crack the trading code, you want to become the successful trader, you want to understand like how you are going to make money in the markets. If you are bleeding capital, you want to stop the losses. And why do losses occur? It's because of mistakes, repeating same mistakes. You want to stop those mistakes. You want to define and refine the process that you are going to follow in the markets to make consistent profits. And once you find that process, you want to follow it with complete devotion. That is what you are trying to do if you are bleeding capital. Make sense? What is the way forward? So please understand, like I'm not here to sell you complete trading framework. So you don't expect that every time I'm talking about way forward, I'm going to sell you CTF. Definitely not. So if you have blown your accounts, the way forward for you is to start working on your trading psychology. Now, what is trading psychology? Like for different stages and different problems, the trading psychology differs. If you want to let go of your losses, it's a different trading psychology. If you want to avoid making the same mistakes, it's a different trading psychology. So you need to understand like what stage you are in, what problems you are facing, and then work on those problems precisely. Focus on avoiding C trades. What are C trades? I mean, if you classify your trades into A, B, and C, obviously C are the worst possible trades, mistakes maybe, you want to avoid those. Make sense? If you are bleeding capital, again you have to work on trading psychology, but this is a different psychology. You have not blown your account, you are not regretting your decision to come to trading. You are hopeful. You know that okay, earlier I was losing a lot of money, but now I have reduced those losses. There is hope. I can just work some more, work a little harder, and I can become break even, and then I can start making profit. So that is what you are thinking. It's a completely different trading psychology. And what you have to focus on here is you have to avoid the B grade or C grade trades, because even if you are making smaller mistakes, they are still mistakes. You have to avoid those. And then you have to start making a little it's funny, but I say that start making mistakes that have lesser impact on your trading, and those mistakes that are a little bit higher quality. Okay, now please understand, you look at Mukesh Ambani. He's making he's the richest man in India, definitely, and very, very close to being richest in the world. Now look at Virat Kohli. He's probably the best batsman right now. Sachin Tendulkar, he was and probably is the god of cricket. Now, haven't they made mistakes? World Cup final, Sachin got out for a low score. He did not score 100 in that match. Do you think he does not consider that inning and the way he got out as a mistake? Definitely he does. So everyone makes mistakes. The best traders, the best cricketers, the best businessmen, the best doctors, best engineers, lawyers, you name it, everyone makes mistakes. But the quality of their mistakes is high. You cannot expect to practice cricket for 2 years and go and start taking Sachin Tendulkar's wicket like probably McGrath used to do or Fleming used to do from Australia. You have to work very, very hard. You have to elevate your game to the level of that master, and then there will be a contest which we love to watch. So you have to improve the quality of your mistakes. You're not going to fall for simple traps by smart money. Smart money has to work really hard to trap you. When you are into that stage, you know that you are making progress. So you have to improve the quality of your mistakes. Moving on. You are a break-even trader. Okay. What is the problem? You are making money, but you are not able to keep it. So let's say you start your week and you make 2 or 3 trades which are very good. You have made some profits, and then again last 2 days you give it back. Why is it happening? Again, trading psychology, a different kind of trading psychology. You have a winning streak, but it is immediately followed by a losing streak. So you make some trades that are profitable, and suddenly you start making trades that are not so good, that are mistakes, and you lose your profits back. Then you get into that revenge trading mode. You try to get your losses back. You lose some more, and now you had a good week, and you blame yourself that, okay, I had good profits. If only I had stopped trading after Wednesday, I would have taken a long weekend and I would have made some money at the end of the week. Break-even trader. So what are the major challenges for a break-even trader? First is he need to follow the process. If you are a break-even trader and if you look into the last 10 trades, you have taken some profit, some loss making, or if you cannot look back, you don't have records, you track your next 10 trades and see what happens. Whenever you make money, you are following the process. Whenever you lose money, you do not follow the process. You break your rules and you pay the price. If you want to be consistently profitable, and by being break-even, you have already proven that, okay, you know how to take good trades. It's only the bad trades that are a problem. So you can work on the process, and that process will help you eliminate the impulsive trades, the mistakes, the trades that are not as per your method, framework, and you will be able to keep more of your profits. And obviously you have to develop patience, like, trading is a game of patience, and if you cannot have patience, you will keep feeding the markets, feeding the slot machine as they call it. What are the main goals for a break-even trader? First and foremost, he wants to start keeping his profits because he is making money, but he is not able to keep it. Avoid impulsive and non-planned trades. See, when you look at the markets, market will show you what you want to see. I have always said again and again that market is an answering machine. You ask a question, market will answer. If your question is wrong, the answer obviously is not going to help you, but you will get an answer. Market will never say that I am not going to tell you what I am trying to do. It will always tell you. It's your job to figure out whether what the market is telling you is correct or not. And how you do that? By asking the correct questions. How you ask correct questions? By following the process. Now, what is the process? Process comes out either from the experience of your mentors or from your own experience. The process I have developed, the framework I have developed, come from my own experience and obviously help of some of my mentors. And I am eternally grateful to them. All right. So what is the way forward? Again, you have to work on your trading psychology, but again, you need to understand like this is a completely different kind of trading psychology. So trading psychology is not same for someone who has blown his account and someone who is able to make break-even. You have to focus on your A trades, trades that make money for you. You have to study them. You have to look at your psychology, your mental makeup when you are trying to take a trade, market situations, everything. You have to find out everything about those profitable trades that you can, so that you can repeat the process. I'm not talking about finding the pattern again on the charts. That is stupidity. Repeating the process that help you make money, and even in that process you will lose sometimes, but on balance you will make money You may not be profitable on a given particular day, but at the end of the week, at the end of the month, at the end of the year, you will keep making money. Make sense? Alright, moving. Now look at people who are profitable, who are either trying to scale but not able to scale their trading, and someone who is consistently profitable who want to maintain his trading. What are the characteristics for someone who is profitable and looking to scale? He makes money consistently, but he wants to make more profits. Someone who is consistently profitable, what he wants to do? He wants to trade in the zone. He wants to be in the zone all the time. He does not want to lose his flow. It's called a state of flow, where you are in such a state where you cannot be disturbed, where you cannot be distracted, where you are one with the market and trading just feels like any other activity that you do day in day out, right? Okay. Now, what are the major challenges? Now, please see here what has happened. When we are looking at the first initial stages of trader development, the challenges were very few but very clear. Now you can suddenly see that the challenges screen is filled. Why? Because the better you become, the harder your challenges become and the greater the reward is. Okay. So what are the challenges? First, you do not want to blow up the account by trading over aggressively. What happens? You make money for a while, you become overconfident, you take aggressive trades and then you lose money. And sometimes I have seen people blow up accounts even though they are great traders. Handling bigger capital. There is something that money does to your mind. Funny things. You are a great trader when you are trading with 10 lakh. The moment you try to go to 15 and 20, you start making losses. So again, some area of trading psychology is involved here. That you need to figure out. Mental blocks we have. We have been given a lot of education from the young age. Most of it is not correct and not helpful. And those mental blocks we need to break. And we need to avoid the overwhelming effect that many people face when they increase their capital. So they are doing great when they are trading with a small capital, but the moment they increase their capital, they get overwhelmed. And so many things happen in your mind that simply drive you crazy and you start making mistakes. What about someone who is consistently profitable? What are his challenges? Not getting distracted. This is very important. If you are constantly getting distracted, you need to change your environment. Working on environment has nothing to do with your trading directly, but indirectly it affects so much you cannot even believe that. Getting tunnel vision. Sometimes what happens, if you know too many things, you become too confident of your opinion and then you pick one opinion and you just stick to it. No matter if the market has changed and it is telling you clearly that yes, I have changed and please change your ways, we just don't do it. It's not difficult to do, but once you get trapped into that tunnel vision, it is almost impossible to come out. And getting too involved, like once you start making money, it is impossible. It's like a new toy for a kid. The moment he gets it, he simply won't put it down at all. What happens? What happens when a kid is playing with a toy and he is simply not giving it up, and he is so happy? At some point in time, what he is going to do? He is going to break it. Then what happens? Then a long spell of crying and tantrums and everything until you fix the toy or get him a new one. We are adults. No one is going to fix our toy. No one is going to give us a new one. And the toy is capital. The toy is your trading ability. So once you get it, you need to be very particular about it. You have to be respectful of it. You have to protect it, not overuse it, not abuse it. That is a big mistake that successful traders make. Alright, moving on. And I hope you are getting some value, some insights into. Most of the times it happens like when I talk about these points with people, they tell me that okay, we never thought like you have to think about this also when we are trying to trade. They are not even aware that you have to think on these lines. So if you are getting value right now, I would request you to please like the video and obviously. Maybe give a thumbs up in the chat to give me some feedback, because you're not sitting in front of me. When I go to Converge or Traders Carnival, people are sitting in front of me. I can ask them questions and they respond. Here it is very difficult. There is a lag and it takes time. So please put in some thumbs up so that I get that positive feedback that yes, you are getting value out of this. Okay. What are the main goals for someone who is looking to scale? First and foremost, he want to scale his capital, he want to increase his capital, and he want to trade bigger size. But when you do that, many a times you will lose focus on your trading. Your focus then goes to money. You have different thoughts about money, and that is going to affect you in your trading. So what you need to do is you need to focus on the process, the method that has brought you so far, no matter what your capital is. It's very difficult to do, but that is what you have to do. That is the main goal of a trader who is trying to scale his capital. Someone who is consistently profitable, he has to maintain a balanced life, not getting too aggressive. Not getting too aggressive with his trading, and you have to be slow and steady. You know, I've been following many people who are trading for a long time on Twitter and different platforms, and there is a person who keeps saying that get rich slowly, and most of you might know about him, but he keeps saying that. I don't look at his analysis no more. I used to back in the day. Now we have different ways of analyzing the markets, but that statement stuck with me, get rich slowly, because you can get unbelievably rich if you have the patience, and if you are ready to trust in compounding of capital instead of trying to make the silver bullet biggest trade of your career. Okay, so these are the main goals. What is the way forward? So if you are looking to scale, if you cannot go from 10 lakh to 20 lakh, I am 101% sure you can go from 10 to 11. But if you go from 10 to 11, can you increase your trading size? No, you cannot. Now, mine is very funny. If you trade with that 11 lakh capital with the same trade size for 1 month, you will become used to 11 lakhs. Then you go to 13, then you go to 15. If you do it slowly, by the time you go to 15, you know that okay, you can increase your size a little bit. And you do it in gradual stages, and you will be able to sustain the growth. Okay. For consistently profitable traders, you can start journaling. Now, the moment you become consistent, you will do everything in your power to stay consistently profitable. So if you are a beginner, if you are losing, you will not be happy journaling, recording your emotions and thoughts. But trust me, if you make money consistently for 3 months, you will find a diary, you will find a pen, and you will put today's date on the top of the page, and you will record your thoughts and process and emotions. It is very essential. Do I suggest it? No. Why? Because I know you are not in that stage. And if you are not in that stage, it is absolutely impossible for you to do that. It's very painful to jot down your loss-making trades. When you are making money, you are very happy. You will record your trades, you will repeat that process, you will keep making more money. But first you have to get into that cycle of making profits. I have a way to do that. You don't have to journal right now. But if you are a consistently profitable trader, you bloody well have to, and you will do it. You will find the motivation. I don't have to tell you to do that. You have to dig deeper into your own mindset. Now no one else is going to help you. I cannot look at Jim Dalton videos and find something new. I may find a new perspective of looking at things, but I cannot find something new. And I may not agree with his perspective all the time, because as you start discovering yourself as a trader, you will realize that you are not agreeing with many people who at one time you used to find very, very valuable. And that does not mean that those people are no more valuable. They are definitely valuable, but now you have progressed. Now you are your own trader. And when you become your own trader, you have to dig in your own mindset to uncover the problems and solutions to potential problems. So it's a fascinating journey, so to speak. Thank you for watching this video. And if you are interested in knowing more about these concepts and how I incorporate the trading development spectrum in my own complete trading framework, which will help you to grow from whatever stage of the trading development spectrum you are to a consistently profitable trader. And if you're already a consistently profitable trader, how you can avoid all the distraction and maintain your consistent performance. Check out the details on the link below.